and welcome back to our Rex Fuels channel, where we discuss issues and trends facing the oil and gas industry. If you're new to the channel, kindly like, subscribe, and share to stay up to date with the current trends. Once again, we have with us Pranav 𝗏𝐼𝐴𝐻, a veteran of oil and gas sector and an expert on strategy and marketing. Welcome, sir.
Thank you, and a very warm evening to you.
Thank you, sir. How's your day going so far?
Day is going good because the week has been very intense and interesting, and coming finally to the end of the week. So looking forward to the Sunday.
Well, that's always the best time.
Yeah.
My first question to you today is, despite the upsurge in OPEC plus production plans, crude rally continued. Do you suppose demand-supply mismatch will continue to drive prices up?
Very interesting question and very timely question, because OPEC in its meeting this week, has agreed to increase the production quotas by 648,000 barrels per day. And this is for the next 2 months, July and August. September, there is no decision. So more supplies, and still we are seeing prices hovering at around $120 for the Brent. So yes, so how to decode this? First and foremost, this has to be seen with together with a little longer term, say 2 months back, as to how things have evolved from the perspective of the Middle East producers, Saudi and UAE, not really responding to US White House calls to engage in discussion onto the prices, which was followed up by passing of the NOPEC bill in Senate. And then this week itself, we had Russian Foreign Minister Sergei Lavrov's meeting with the Gulf countries in Saudi Arabia, which reiterated their strong commitment to maintaining a united front. And now comes this OPEC decision to increase the production, and to sign it off, the White House complimenting the OPEC and particularly Saudi Arabia for its role in increasing the quota. So what we are seeing at a larger geopolitical level is US trying to mend its kind of recent cold relationship with the Middle East. So that is one. Russia at the same time reiterating together with OPEC plus that things are as strong as ever between them, and we have no reason to doubt that, going by what we see. And these additional supply quotas apply for only 2 months. September is yet to be known, and it's relatively small, 648,000 barrels per day. So in all, we see current prices with less of an upside potential and more risk towards the downside.
That's quite a few notable key points in these weeks. My next question to you is, what is the likelihood of high inflation with a high interest rate and strong US dollar impacting demand?
Matter of fact, the combination of these 3 factors, as you have put, has been the main reason behind all the agencies, including OPEC, IMF, World Bank, everybody, when they have forecasted decline in the crude oil demand growth. And the inflation would at some level start hitting in the consumption of the products. But right now we have a bullish factor in terms of China coming back to the market, in terms of lifting of its COVID lockdowns. That is bullish, but the bullish impact onto the prices needs to be tempered with China's role as perhaps the biggest buyer of the Russian crude. So how much it will play into the price bullishness is kind of muted. This is our view. And we still see that the demand would still be lower than what it has been seen. So big price risk on the upside is not really warranted at this moment.
Thank you so much for your insight. And thank you for being here today. As usual, it was a pleasure talking to you.
Pleasure. Thank you.
And thank you all for watching. Continue to show support to the channel by liking and subscribing. See you soon.